Hello, hello. Welcome back.
Hello.
Welcome back, everyone, to episode 18 of Living Richly with Curo. We're so happy that you're joining us today. Today, we have a special guest. I feel like I say that every time we have a guest, but they're all special. They're great. We have a special guest, David Hillelsohn, joining us today to talk about a crucial topic, which is what on earth to do about healthcare when you retire early before Medicare age. So we are super excited to ask him all the questions that we normally get from clients. But before we get into that, my name is Ann McCabe, and I am the CEO and a partner here at Curo Private Wealth. And I'm joined, as always, by the lovely Atrisa.
Hi there. I am Atrisa Roberts, COO and partner, Curo Private Wealth. Welcome to our podcast.
Yes, welcome. So good to have you. All right, so before we let David in, we always love to do our little catch up. And we didn't have a chance to catch up earlier this week, so I cannot wait to hear about your weekend and all the things you want to share. So how's life?
Yeah, of course. Life is good. The rain finally passed through in DC. So we got some sunshine. The weather was beautiful on Sunday.
Yeah.
So last weekend was my sister's birthday. Sunday was my sister's birthday. And she wanted to do, I called it a vineyard adventure, but she wanted to do a wine tour of a couple wineries here in the area. And if you know anything about the sort of DC metro, we're surrounded basically on all sides by fantastic vineyards and wineries. So we got a Sprinter. It's about 8 of us. We went out to Crimson Lane Vineyards first, and then over to Delaplane Cellars. We have been to Delaplane a couple times. Crimson Lane, I think, is a newer vineyard in the area, but it is absolutely stunning. It is probably the most beautiful, and that's saying a lot because there's some great
There's
ones.
some gorgeous wineries for sure.
Especially out in Virginia and Loudoun County, even south of DC, there's some fantastic ones. It's one of the most beautiful ones that I've been to. You climb this hill, so it was a little treacherous getting up there in a Sprinter. So you climb this hill, but when you walk out onto the porch of this winery, it just opens up to the most beautiful hillside of just vines. It was gorgeous. The pictures were gorgeous. The wines were good. The tasting note included 4. It was 3 whites and a red, which I was a little put off by because I'm a red girl.
Yeah, too many whites for you.
Right. And it's so funny now that anytime a Chardonnay shows up on a tasting, I go, Anne would love this.
Where is she to drink this crappy wine?
Anne would love this. But to be fair, I realize now that there's a wine that I actually like even less than Chardonnay, and it's a Petit Manseng. I've now tried it at 2 or 3 different wineries, and I realize I just don't enjoy the taste of that white of a Petit Manseng. I think we actually tried one when our team did a wine tasting at, where were we? Stone Ridge, or remember we had a team event? Anyway. Stone Tower, right. I think we tried one there too. I just don't care for it. But other than that, beautiful time, beautiful day. I think the weather stayed in the low 80s all day. It wasn't super hot. It was gorgeous. So we had a fantastic time.
All right. That is totally going on my list.
Yeah. Sorry, I went on and on and on about it, but it's gorgeous. It's absolutely gorgeous.
No, it's helpful because, as you said, there are so many options. And so I get overwhelmed. Like I know our go-tos, the ones that I know are great and we like them. But it's nice to hear about new ones that are actually worth, taking the trip and going to check them out. So I will totally put that on my list.
Yeah. I mean, it would be closer for you. It took us about an hour, 15 minutes we got picked up at Pentagon City, but it took about an hour, 15. So if you're coming from DC, it's a little bit of a hike, but worth it. I would definitely go back. Absolutely.
Yeah. I've been to Delaplane too, and that was out there, but it's beautiful too. I really like Delaplane.
Yeah, it is. But they've done a great job with this one.
Good. So she felt loved, celebrated, wined up, all the things.
Yes. Good. My sister is a Leo, so she loves being the center of attention. So anything that's about her, she enjoys. So she had a great time.
Good. That's awesome. Yeah. So glad.
Yeah.
Yay.
All right. Yay. What's new with you? What's going on?
So what's new with me? Not a whole lot. But I thought about what I wanted to share today, and I
Okay.
had an interesting conversation with my 12-year-old. And we
Okay.
have an interesting situation in our household where we have two middle schoolers and a rising high schooler, and then a second grader. The second grader is easy. But
Mm-hmm.
our, middle school slash high schoolers, they're all going through this very challenging time. And I remember this being the case back in middle school, where they're trying to fit in and they're trying
Yes.
to like figure out, they want to be cool and they want to fit in and they don't want to be different. And I was telling my 12-year-old, and then I think this is a good message even for adults to hear. I was like, the sooner you can figure out who you are, not pretend to be someone you're not, and just like own who you are, who you're
Mm-hmm.
not, be confident, believe in yourself, be comfortable in your own skin, like you will attract the kind of friends and potentially, girls in the future, because he's already interested in girls. You will attract the right kinds of people into your life, but you have to figure that out, right? And you have to figure out, like, it doesn't actually matter to fit in and to pretend to be somebody that you're not. So we had a really good conversation. I don't know how much
Okay.
stuck with it, but these are things that I wish I would have known in middle school. Took me a good long while to figure it out. But don't you think that's the case? So, like, the sooner you can
Yeah.
just own who you are, like that energy, the confidence, and the like, I don't give a crap if you like me or not, vibe you put out there, I think it really does attract the right kind of people into your life.
Yeah, no, absolutely agree. I think the challenge with middle school, because I won't say I hated middle school, but middle school
It
was a
was
rough time
hard.
in general.
Yeah.
Yeah. I think the challenge there though is that it's also the time in your life when like your body is physically changing for, for boys and girls. And there are parts of you that are developing. Your hormones, I think, start to rush around and they're all over
Yes.
the place. And I think that also creates the challenge with being comfortable just with who you are, right? Because you're also experiencing just all of this physical change all at once. I just remember when I think back on it to middle school, I remember that it was so hard for me because I felt like, I was shape shifting and then experiencing all of these things and wanting to be the cool girl and never feeling like the cool girl. I tell people all the time that I don't think I actually found my groove probably until college. I mean, high school was fun for me. I had a great group of friends. I had a great experience in high school, but I don't think I started to find my groove, like my own style and my own actual interest and taste that weren't influenced by other people as much until I made it to college.
Yeah.
So I think if there's a way that you could encourage, like you're doing, right, encourage your children to start to tap into that sooner, I think it will absolutely change especially their social experience of
Yes.
getting older and coming of age, but definitely just life in general. And like you said, the people they attract and just immediately finding where they fit and where they want to fit. Because it took me a while to get there.
Yeah. Yeah. I think even finding that by college is probably earlier than a lot of people. I don't think I actually stopped caring what people thought about me probably until my 30s. I feel like 30s
Mm,
was really a turning point. I think I knew who I was at that point, but I still cared about what people thought
hmm.
about me in my 20s. By 30s, I was like, I don't give a crap. Like, life is short. You like me, cool. You don't, that's cool too. There's plenty of people in the world. So yeah, I think you having figured that out by college was actually probably earlier than most people. But it is hard. And to your
Yeah.
point, their bodies are changing, their voices are changing. So they're probably like,
Mm-mm,
we don't even
especially for
really know who we
boys.
are. Yeah,
Like
exactly.
one day
All
they
sorts.
just wake up, right? And their voice is deep. It's so
Yes.
weird.
Yeah. It's when he talks now, if I'm not looking at him, I'm like, who is talking? I mean, he sounds like a completely different person. So yeah, so it's not easy, but these are some of the conversations that I wish like my parents would have had
Oh
with
yeah,
me in middle school, that we just, our parents were different, obviously different generations. So
absolutely.
I'm embracing the fact that he's open to talking to me about these things. And it's also interesting because they're in an age where they want to do the things they want to do, and they're already starting to like pull back a little bit. So when they're little, they'll
Mhm.
spend a lot of time with you and
Right.
want to have quality time. And by the time they're teenagers, middle school, it's just again, they're finding themselves and much more independent. So I'm also trying to just take advantage of when he wants to have conversations with me,
Yeah.
when he wants to tell me things.
Yeah.
So it's
No, that's
but I
great
hope
though.
Yeah.
It's great that he opens up to you that way. And other kids in middle school can be mean too.
Oh
Right.
my
So I think
gosh, they're
it's
so
nice.
mean.
Yeah, I think it's nice that he at least has a level of comfort where he'll come and express those kinds of things to you.
Yes, yes. I think the other thing I wish I would have learned when kids were mean is to never take anything personally.
Mm,
Like I always tell them if somebody's mean to you, it's more about them than it is about you, right? I think it
mm-hmm,
was Oprah Winfrey who originally said this, but she said, hurt people hurt people.
mm-hmm.
And I was like, that's
Absolutely.
so brilliant and so true, right? So people who tend to be mean to other people, it's because they have something going on inside themselves and they're trying to
Right.
hurt you, but really it's them who is hurting. So it's tough, but
Yeah. And I feel for you. I feel for you raising teenagers, right, in this generation because they're different, right? Gen Z and
yes,
Gen Y, they're different than we were even, and
so different.
some in some ways in really good ways, in some other ways where I'm like, but yeah. So I'll get you a bottle of Chardonnay. You'll,
I appreciate it.
I think
I
you'll
will
need
take
it
your
for
sloppy
the next
seconds
few
of
years.
Chardonnay.
I think you'll need it for the next couple of years.
Yeah, that is for sure. It's only just starting. So by
Yeah.
the time the fourth one comes along, though, I'll be like, oh, I got this. So much
Right,
experience.
right, right. Right. You'll either have all of the experience or you won't care as much
I
anymore.
won't
It'll be like,
care.
okay, go do whatever you want to do. It's fine.
No, totally. That was how my mom was. I was number 5 of 6. By the time my younger brother, who's
Hmm.
only 2 years younger than me, by the time we were teenagers, she was like, whatever, just like don't kill yourselves.
Right. Don't go
Don't
to
be
jail.
complete. Don't go to jail. Don't kill yourselves. Kill other people. Otherwise, I don't really care. I mean, she was like so hands off. It was hilarious because she had been through it 4 times over. So
Yeah.
yeah. Anyway. All right. Well, let's let David Hillelsohn in here. Let me give a quick intro of you, David. So, first of all, I want to mention that you founded your firm back in 2016, but prior to that, you spent 26 years in the long term care insurance space as a wholesaler. So, lots of experience and background specifically working with insurance companies, which I think makes you uniquely positioned to help now consumers understand how to deal with insurance companies. And then the other thing I wanted to mention is since you launched D Hill Financial, you have been recognized as one of the top insurance professionals in pretty much every single publication in the DC metro area. I'm not going to list all of them. Yes, bravo, confetti, confetti. But definitely recognized as a great insurance professional and someone who we entrust our clients to all the time. We refer our clients to you all the time for the insurance conversations because we know that our clients will be educated and very well taken care of. So we appreciate the partnership. And again, thank you so much for coming on to talk specifically about health insurance for early retirees.
Awesome. And again, you have amazing clients. So kudos to you for attracting the best. And to be recognized in those publications for a background in healthcare, I think is particularly unique and rewarding, especially in the true health insurance space, which is a general area of dissatisfaction.
Right.
Yes, I think that's true. You don't really hear people walk around like, I love my health insurance company.
Correct. Correct. In
Yeah.
fact, I actually didn't think I was going to be in healthcare because of that area of dissatisfaction. And yet you go where you're needed. And where I'm really
Right.
needed today is in navigating the unexpected twists and turns in the healthcare space.
Yes, exactly. Because you can add a lot of value there.
I was going to say, people often find themselves having to navigate these waters sometimes by design and sometimes unexpectedly. So they're sort of thrown into it and, looking for guidance at a time in life where perhaps they didn't think that was going to be necessary.
Yes, that's a great point. Some people choose to retire early, other people unexpectedly retire
Right.
early, but in either case, they have to deal with this big question. So why don't we start there, David, with, healthcare coverage, especially when we're talking with clients who are planning to retire early or find themselves in this situation unexpectedly. Healthcare coverage is one of the biggest concerns, one of the biggest questions, sometimes one of the biggest expenses that folks have to deal with. So what are some of the key challenges that people face when they are thinking about getting healthcare coverage as an early retiree? And just for definition purposes, let's say anyone who's younger than 65 and therefore does not yet qualify for Medicare.
Yeah, I think most people don't know how much their employer actually contributes to their health insurance plan. And so that first step is sort of awakening, where you see the amount of subsidy that you're getting through your employer. And so that outside of the underlying cost of healthcare, you all of a sudden see that you're going to be responsible for 100% of that cost. And so that's a surprise. I think the number of options that are out there in the market, where all of a sudden we're a consumer without the direction of our professional HR team that has helped us not only sift through the insurance carriers that are out there, but limits the amount of products that we can even choose from. And so we often look at that as limiting, but what a blessing it is as well when you have professionals that do that on a regular basis, analyzing the plans and are able to provide you just a few options to choose from. And even those options perhaps require some outside guidance from a professional like me. And then the other is a major concern that healthcare costs are going to outpace investment growth or inflationary growth, and how we're going to keep up with that over time, especially as we get closer and closer to a Medicare age where the cost of health insurance rises dramatically before that drop off at age 65. So that's a lot to think about. Having the professional guidance, seeing all those options that are in the marketplace, and let alone, the costs that may be associated with the different types of plans that are out there.
Yeah, it reminds me of the Cheesecake Factory menu, right?
Yeah.
Who needs that many options? I mean, really.
Correct. You're going to find exactly what you want as long as you can find it.
Yeah.
Right. Well, speaking of the options, what generally are the options that exist for early retirees when they're before Medicare age?
I think the first option has to be your existing plan, right? We look at COBRA. Can we keep the plan that you have? And we use that as the benchmark for baseline for anything else that we may be able to evaluate. COBRA is typically offered for up to 18 months. And so that is not going to be a permanent solution, but it is often a very good one. And what's important is you can hear from the advisor standpoint, we want you to find the best option. So if that is your existing plan, that's where we want you to be. COBRA is offered for groups of 20 employees and above. If you're in a group that's under 20, there is often still state continuation. So if you're in a smaller employer, you often can also continue that plan, and understand that COBRA is a federal program for 20 and above. Under 20 is governed by the state. And so you may have clients all over the country. And so it's just important to understand that the state continuation rules may differ from country or from state to state. The other thing is that the options may differ from state to state as well. So as I talk about options, understand that where we are here in Virginia, we're in an area where Blue Cross Blue Shield separates this territory by a street. You're on the west side of Route 123 and you get Anthem Blue Cross Blue Shield. You're on the east side of Route 123 and you get Care First Blue Cross Blue Shield. So I think understanding the options in the market is important. And as I communicate what some of those options may be, that could be different in Virginia versus Maryland versus DC. Today, Virginia offers a new marketplace for individual buyers. So coming off of an employer plan, you'd have a special enrollment period where you could buy in the individual marketplace. Those plans this year are very competitive. We'll talk about, I think, in a few minutes, what are some of the things to look for in particular and where those could fit. You may be leaving your primary employer and starting your own business. And so you start evaluating whether group health insurance of your own is the right approach. And then today you're going to find, even here in our area, the chambers of commerce are trying to offer health insurance plans. And so the more options you have in the market, the better. And we just want to explore every option that's on the table to try to find the best fit at that time.
Let's kind of double click on that, David, in terms of what people should be evaluating, considering. So outside of their existing plan, if for whatever reason that's not an option or that's not the best option, what are some questions you're asking folks to help them determine and help them evaluate different plans?
Yeah, the first question isn't what does it cost? The first question is, are the people you need to be covered? So our first question is, do you have any doctors? Do you have any prescriptions that we want to make sure are included? Right? That has to be the primary consideration so that the coverage performs in the way that you expect it to. I think one of the biggest challenges people have is they're used to this term PPO. And I think that is very common in a large employer plan, but it is not necessarily exactly what you need as you're exploring coverage as an individual. So going back to that, are my providers covered? What does it matter what the network is called if your providers are included?
Yeah.
So even this term HMO, people apply a methodology to those letters, where they have historically used that to mean a health maintenance organization, an organization that requires referrals. You have to see your primary care and they are controlling the process. But today, HMO may just refer to the nature of the network. Is it a local regional network that doesn't allow out of network benefits? And isn't that okay if your provider is included? So I think one of the major things to look at is, how broad of a network do we need? Do we need a national network? Are we comfortable with a regional network? We know that emergency services are going to be covered anywhere we go. So if we're concerned about domestic travel, that shouldn't really influence the type of healthcare plan we purchase on a day-to-day basis. So from there, you want to look at overall usage and understand what the out-of-pocket maximum is on the plan. And so very often people will focus on copays or they focus on the deductible, and that's important from a day-to-day usage standpoint. But insurance is often designed to cover the catastrophic, the things that we can't cover on our own. And so really a focus on out-of-pocket maximum. What is our major exposure is the driver. So if you take the premium and you multiply that times 12 and you add in the out-of-pocket limit, that's how you can define what your maximum exposure is within the plan. And that's the process that we use to help individuals navigate towards a plan that's right for their needs.
Yeah. So what it sounds like to me is that as people are transitioning, they have to throw off thinking about health coverage the way they thought about it in their group plan. I think that's the first advice. Just remember that you're entering a brand new territory that may look like, sound like nothing you're accustomed to in the group coverage that you've had in years past. Step one.
Yeah. Again, if you like the plan you have, then our first step may be to mirror that. What does that look like in the marketplace? And we're doing that this week for a referred client. So you have a plan, you are very comfortable with that plan, and all you want to do is be able to mirror that on your own. That is more and more common with some of the high deductible health plans that are paired with a health savings account. That is something that's more and more common, where individuals are asked to handle a little bit more of the upfront costs and there are some benefits that are derived from that. That's a very common plan today in middle market in particular, and maybe something that you can't find on the individual marketplace, but something that maybe you can find is in the small group market, where now you're setting up a small group plan to meet that particular need. So I do think that people have a comfort level with what they have. It's the network variation that we may need to alter, but the underlying benefits, we're going through a lot of changes in life right at that period. So as much as we could minimize some of those other disruptions, I think there's just a comfort level for the individual to say, all right, well, I'm now on my own, but I'm trying to deliver big business benefits as if I still work for that major corporation. And we're certainly sensitive to that.
Yeah. So you mentioned, as you were explaining the options, domestic travel specifically. You brought that up, if you're traveling domestically. Well, I mean, as Ann and I know, when clients go into retirement, international travel starts to become something that for many of our clients is a goal. Is coverage for health costs as you're traveling internationally even something that people should consider? And if so, what are the concerns related to those kinds of expenses?
Yeah, we have seen a boom in international travel this year, and we've written more international medical plans this year than in any previous year in my career.
Wow.
And so that says something. Some of them have been voluntary, some of them have not been voluntary. So we're finding that if you are going for extended travel or to certain parts of the world, you're not getting a travel visa without the travel medical insurance, and not just a check of the box. We issued a plan for someone recently, and when they went to go file for the visa, the application required that they had a zero deductible, where we had probably implemented a $250 deductible. And so wow. I've never seen them being that specific on the level of coverage they're looking for. But if you think about networks, these networks don't include international providers. And so a lot of our domestic plans don't provide benefits outside the country, let alone if you are in a part of the world where English is not the primary language. You need an entity that can communicate in a time appropriate fashion to be able to get the level of treatment that someone needs, likely in duress. And so the last thing you want to do is be in duress in other parts of the world and not have proper representation. The major claim is typically around accidents and fractures. That's the most common. So if you're traveling and highly active, that's going to be something that you need to be a little bit more aware of, especially if you're traveling alone. But repatriation back to the United States, these are major expenses, and you're going to want the resources to be able to cover that. Where traditional domestic medical insurance today under the ACA doesn't have a cap on benefits, when you're buying coverage internationally, those plans typically have a cap on benefits. And that cap may be up to $1 million, it may be $100,000, it may be age dependent, but those pieces reduce the cost of that coverage as well. So you're not talking about a significant cost because you're typically covering a 2 or 3 week window. But it is something that we want to have while we're traveling, just so that we have that added peace of mind that if anything happens, our needs are going to be addressed.
Yeah, absolutely. So one of the things, David, that we have to do as financial planners is help clients estimate how much this cost will be. Let's say they're 55 and they're planning to retire. So we're talking about a 10-year period that we have to plan for this additional expense. Do you have any tips for how to estimate those costs or rules of thumb? I know it's obviously depending upon the situation and probably varies dramatically, but any advice or tips there?
Yeah, I would start with COBRA. I understand because your employer is able to provide that coverage. very quickly. It'll give you a benchmark for overall pricing, and sometimes COBRA's less, sometimes COBRA's more, but at least you have that as a benchmark. One of the advantages of the federal marketplace, even though Virginia has their own, Maryland has their own, Washington, D.C. has their own, they offer subsidies. So where you've been used to a subsidy from your employer, you may be taking a step down in income when you leave that employer. And so it's one of the reasons why healthcare costs are so sensitive, right? Because this becomes a major part of our monthly spending. But we're also losing that employer subsidy. So if we can pick that back up at a time where our income is reduced, the subsidies on the marketplace are dependent upon overall income. So if we're taking a step back in income, even if we're thinking we're going to start our own business, become a consultant, earn some additional income, there's a time where that ramps up as well. And so I believe getting a quick quote from the marketplace is a great place to start. And so as people inquire with us, we'll ask for ages, we'll ask for zip code, and we'll ask for expected annual income for this tax year, just to get some baseline pricing, for coverage. Within the marketplace, people will find a wide range of products based upon their zip code. And so I don't necessarily recommend benchmarking off of the first rate you see, because the first rate you see is going to be the lowest benefit plan. And so it's going to be the lowest cost. I wouldn't necessarily benchmark off of the highest either, but our job is to find a match, for the types of coverage that people want. And so based upon that, it's pretty easy to come up with a baseline recommendation from there, or a baseline pricing. And then the other thing I would just mention here is that there's no cost to have a broker assist with plans on the marketplace. There's no added cost. We get paid by the insurance carriers based upon the families that we help. And so we can navigate that in a much more time efficient manner, asking that first question, do you have any providers we want to make sure are covered? And we go from there. One of the limitations on the marketplace is going to be that they are regional plans. So for people that want a national network, they may still look at plans off of the marketplace, off of the exchange, which are available as well, just without a subsidy.
Got it.
Yeah. Now, in addition to those subsidies, of course, which are helpful, are there any other products, accounts, things that people should consider to help toward the cost of paying for healthcare out of pocket?
Well, the one is something that maybe you've heard of, but you haven't really thought of. And that is, I would get a GoodRx card. Not something that you would have thought of outside of the pure insurance model, but prescription costs are a major driver of healthcare spending. And there are non-paid subscription models that offer discounted prescription services. So GoodRx is one of those. And I highly encourage that, so it gives you more options, right? I can apply this through my health insurance, but I may get a discounted rate just by using an outside vendor. And, I'd rather spend less. On the other side, from a plan design standpoint, more and more of our clients are exploring plans that are paired with a health savings account. A health savings account is paired with a high deductible health plan, and it offers some unique tax benefits at a time when income may have been higher and we're looking for some additional tax breaks. And so the way a health savings account works is it is paired with a high deductible health plan, which means you're going to have a higher deductible. The only services that are covered before that deductible are going to be preventive services, annual physicals, female visits, colonoscopies that are scheduled and part of regular treatments at different points of our lives. Those are all covered without out-of-pocket expenses. But other than preventive, it is deductible first. And so the advantage is that the rate for the health insurance. Underlying health insurance is a little bit lower. And we, in having this type of account, are allowed to put additional funds into a separate account called the health savings account. Funds put into that type of account reduce our taxable income, and we are now able to pay for medical expenses with pre-tax dollars. You may have heard of flexible spending accounts. Flexible spending accounts are tied to copay plans. So instead of a high deductible health plan, a more traditional model of health insurance is one that has copays. You go to the doctor, instead of the deductible, you pay to copay. That type of plan does not get paired with a health savings account. That gets paired with a flexible spending account, something that is offered in a large employer setting, but not offered to individuals. And so the health savings account becomes an attractive model, with one of the big advantages being that the dollars aren't lost at the end of the year. So when you hear a flexible spending account, you often hear use it or lose it. You've put that money aside, you've gotten the tax benefit, and now we want to make sure that you're using those dollars in that taxable year. A health savings account, those dollars roll over until you need them. And so as a beneficiary, you may find yourself receiving funds from an unused health savings account. I know, because when my parents passed away, I got a check. And so now all of a sudden we've gotten a tax deduction, carried that through to our over our lives. And if we've used it for healthcare, we've now paid for medical expenses with pre-tax dollars. That's a huge advantage without having to itemize. And if we don't use it, those dollars roll out into a very effective form of estate planning. So again, very common solution today, especially as we're trying to mirror some of the large employer benefits that are out there.
Yes, we did a whole episode on HSAs. I can't recall exactly the number, but we can link to, in the show notes, we can link to that episode. It was in one of our top 10 and a very popular episode. We did a huge deep dive into HSAs and we're huge fans. So thank you for mentioning that and the big difference between HSAs and FSAs. So David, we're about out of time, but we love to ask the same question to all of our guests that we have on the podcast. So as you know, the name of our podcast is Living Richly with Curo. So we'd like to ask you, what does living richly mean to you?
I think living richly is such a deep and important concept. For me, living richly means living without regret as the primary driver to the things we do. And so that means celebrating every moment for the moment and greatness that it offers. It also means having the resources to do the things we want to do to make an impact on the people with whom we want to influence and impact. And so being intentional in those things for me is living richly.
Love that. Yeah. Thank you for sharing. So David, you have answered our questions, given us so much information, things to think about. Thank you so much for your time and all the information. If folks have more questions or they'd like to speak with you about their specific situation, what is the best way for people to get in touch with you or find you?
Yeah, the best way to find us is likely through our website at dhillfinancial.com. Gives you some insights on who we are and who we support. Our primary client is an individual looking for healthcare. That may be a retiree, but it may be someone starting their business for the first time, and we're here to help them along that journey.
Yes. And as I mentioned, I know today's topic was all about health insurance, but David also has a wealth of knowledge about long-term care insurance. So that's another, if you're interested in if you're interested in talking with him about that, maybe we can have you back on to talk about long-term care in the future.
It was on my mind.
Yes. Awesome.
Yeah.
Well, thank you so much. Yeah, for being a wonderful resource for us. As you know, our practice, Ann and I, focuses in on women, and sometimes even coupled women, single women who are going through transitionary periods. And one of those that we're finding is women who are transitioning into retirement much earlier, or like you mentioned, transitioning from employed to self-employed. So you've been such a wonderful resource when those kind of transitional period questions come up, and have always done such a wonderful job working with them. So thank you for being a great partner for us as well and our clients.
Thanks so much.
Yeah, we really appreciate it. So that will wrap us for today. Thanks again, David, for your time and the information. And thanks to all the listeners. If you have a friend or colleague who you know is planning to retire early, this would be a very important episode to share with them, because I assure you that healthcare coverage is probably top of mind for them. So please do share if you have a friend or colleague or family member in that situation. Please be sure to give us a 5-star and a review, what you learned, what you enjoyed. That will help this podcast reach more people. Thanks again for tuning in. And also, before I forget, please send us your questions. We would love to answer them here on the podcast. You can send an email to podcast@Curo Private Wealth. If we answer your question, we will send you an Amazon gift card as our thanks for taking the time to ask those questions. But we will be back here next week with another episode. And until then, thanks again for tuning in.
Thank you. Live richly.